Hey, it's Brent of the Brent and Brenda team. I'm back today. I'm here with Ron Willoughby. He is a Senior Vice President at Morgan Stanley, and we're talking a little bit about the real estate market today and maybe looking at it from the side of the investment standpoint. So, Ron, thanks for sitting down with me and going over this a little bit.
Absolutely, thank you.
Tell us a little bit about your background and kind of, I'd like to hear your take on maybe what are a smart investment in today's real estate market.
Well, I'm about 20 years living in the Valley. I've been doing financial planning for individuals, small business owners for the majority of that 20 years. And as far as real estate's concerned, you know, it has been a volatile period, but I think the consensus is that certainly on the lower end of the market, the prices are still very, very inexpensive, and the opportunities are spectacular. I hesitate to say that they're once in a lifetime because I don't know what the future holds.
Yeah.
But you know, in retrospect, I think that we'd all agree that the opportunities given rental rates and such are very good. I think that if we all look at what Warren Buffett has said, you know, if there's nothing he would like more, you know, were it feasible and were it practical, he says he'd like to buy 500,000 single-family residential homes. He can't manage it, but if he could, that's what he says he would do. So that holds a lot of weight with me.
So tell me about your small individual investors. Are they coming to you and saying, you know, hey Ron, how's the market? How's the stock market? Do you think I should maybe pull money out of the stock market? Do you think I should invest in real estate, or what's sort of your sense on what the general public is feeling with regards to investments?
Well, I can't say that I've had a lot of people pull money out to go buy residential real estate, but I have had people that are finding the opportunity to buy residential real estate with small down payments, and they're doing some of that.
Yeah, absolutely. I mean, there's a lot of people out there right now. I think the one thing to keep in mind is that financing right now is probably the cheapest it's ever been in our lifetime. I mean, you can do FHA financing, 3.5% down payments. You know, on a $200,000 house, you're talking about a $7,000 down payment, and you know, interest rates in the low threes, which is just, you know, absolutely, you know, unheard of in today's environment. So, tell me a little bit more about your take on maybe the short-term market as far as real estate's concerned. I'd like to hear your opinion on how that is, and maybe also your take on what the stock market's looking at, like in their short term as well.
I think that they're very, very, very closely linked, and I think that as the real estate market becomes more and more solidified, it's going to bode well for the stock market. So you can kind of pick which way you want to go, but at the end of the day, I think that, you know, the financial service stocks, Bank of America, Wells Fargo, JP Morgan, Citigroup, as the real estate market becomes a little bit more solid, and the real estate prices go up, the equity that they have in some of the houses that have come back to the bank, every time that number goes up a little bit, it's an improvement for the banks. And so, short term, it's really hard to say in the short term, but I think at the end of the day, I try to take everything in a little bit longer term perspective. And so I think that on a long-term basis, I think that they're wise investments. I think that from the standpoint of it being a wise investment, you know, I don't know what the price is going to do between now and 6 months from now, but my concern would be that the interest rates would start going up, and that the math on this opportunity might start to change at that point. So, you know, taking advantage of the low interest rates, I think, is probably the most important thing right now, rather than trying to worry about whether or not the price is going to go up, you know, 2 or 3 or 4, down 2 or 3 or 4%. It's just,
sure.
That's really not what's important when you're when you're going into something that you intend to hold for an extended period of time. Fix and flip, I did not into it, not anything that I would really, that's just speculation as far as I'm concerned.
Sure.
So I couldn't really speak to that.
Yeah, absolutely. Yeah, well, I think it's important to kind of keep in mind, I think Ron brings up a good point, is that especially when it comes to real estate, we're talking about the fact that, yeah, prices may go up or may go down or what have you, but I mean, you're locking in at, say, 3.25% versus, say, 4.5%. That's a huge difference over the course of a 30-year fixed loan.
Yeah.
And it's definitely something to consider as well, too. So, Ron, I'd like to ask you one more question now. If individuals maybe are looking to, an investment piece, or looking to get started in investment, or looking to find other avenues, how do they reach out to you and contact you?
Well, I've been at Morgan Stanley right here in the Tempe Town Lake office for about 7 years, and you can find me online on the Morgan Stanley website. Just look up Ron Willoughby, or they can just go through your website and find me here.
Fantastic. All right. Well, listen, I hope that's been helpful for you today. We'd like to just talk a little bit about the investment side as well as it relates to the real estate side. So, as always, if you have any further questions, we always ask you to reach out to us at www.brentandbrenda.com for more information.